It's never been a better time to be a human being than right now.
Welcome back, passive investor, to another episode of the show where we educate you on how to retire early on passive income. The only way to be retired is on passive income. And I think that this show with Brandon Bruckman of Insight Investment Advisors really touches on that. When people get to the point in their life where they're ready to exit an asset looking for more passive income, what type of options they have to be investing in. I hope that you'll bear with me with my voice. As bad as it sounds, I assure you I feel even worse. Brandon and I have rescheduled twice to do this show, and I've been so excited to talk to him that I just had to take it down when we both had the opportunity to talk. In this episode, we get into how to reinvest into alternative assets, why everything except stocks, bonds, and annuities are considered alternative, what type of investor would be interested in the types of services that Brandon and other registered investment advisors who specialize in real estate will offer. We talk about incentives, who's incentivized to do what through money, through responsibility, through social conscience, impact investing. And I think where the conversation really gets interesting, it gets a little bit political on talking about trust and control, on how we can learn to trust ourselves to make good decisions, how we can learn to trust others to invest our money wisely or manage our money in projects wisely on our behalf as we're working our way towards totally passive income for retirement, who we trust to take on the big infrastructure types of projects that we need to have to live in our modern society, and how to both take more control and responsibility as investor while delegating more responsibility and control to people who are good at doing what they do. We talk about the kind of people that we are versus the kind of person that we want to become and the barriers that often stand in our way from just being that person right now, and how working with our investors and our clients have really changed our lives and our perspectives, watching their good intentions and how they use their wealth to create a better society. They motivate us to want to do better ourselves. You're going to love this one. I know from a tax standpoint, usually our eyes start to glaze over and we think it's really boring, but we get into the reason why the tax code is the way that it is, the behavior that it incentivizes, and the kind of people that it takes to make our society a better place to live and a better place to serve. So thank you for joining us today. Here's Brandon. So welcome back, everybody. We've got Brandon Bruckman today calling in from the Midwest in Milwaukee. And Brandon, I reached out to you to be on the podcast because we've interacted some on LinkedIn, and I feel like what you're offering to help people who are high achievers, high income earners, successful entrepreneurs get to that next level. And part of that is paying less taxes, and part of that is just thinking outside the box on how to structure the deals and the investments that are doing. So I'm really intrigued by what you're working on, and I love the practical content that you're providing, and both with comments on my stuff and also with your content, and really wanted to just dive into this a little bit more because the first time I heard about this, I was definitely not the ideal client because I didn't have an investment that we were exiting that was large enough. And I really thought, oh, that's for high net worth rich people. And that's not me. But as I come closer to that point of realizing, wait a second, like I need to take a second look at this. So can you introduce yourself a little bit? Tell us about what you do and how you got into this field.
Yeah, absolutely. Emma, thank you so much for having me on. Gosh, how did I get here is a winding story. We'll get to that in a second. But my name is Brandon Bruckman. My firm is Insight Investment Advisors. I'm based in Milwaukee. My business partner, who I started the firm with, is based in Kansas City. So definitely deep Midwest roots from our firm. And we are registered investment advisors, which I think is a weird person to be in this real estate space at all. I don't see a lot of my peers here. And that's for a variety of reasons we can talk about. But we found value in this space probably about 4 or 5 years ago. My partner, Josh Wright, really found it. His dad owned 9 hotels in the Kansas area, and he had a situation where he wanted to exit. He went to the CPA with Josh, and lo and behold, they had a 40% tax bill. And he throws it at Josh and says, go fix this. And so that was many years before a lot of the solutions we have are present. And so there really wasn't a lot of answers that made sense at that time. And so we sort of stumbled upon 1031 exchange. I had no idea what the heck that even meant before Josh brought it up. And then we stumbled into this thing called a Delaware Statutory Trust, which also sounds very weird. I had no idea what it was either. But we found that there's a business for us here in that a lot of folks that own real estate and have owned it for a long time don't have or not aware of some of these solutions that in essence takes them from active to passive. They don't know what's available. They often aren't expecting it either. But boy, when you dig in, it's what they want. And it's what they desperately want and need is to get passive. And so that's sort of what we help people do at this point is think about making, in essence, a pretty big life transition. And those could be real estate, mostly active real estate investors. We find a lot of farmers and landowners as well have these needs, especially from a succession perspective. And then we spend a ton of time talking to business owners. If they have real estate inside their business, this can be a potential solution. And so working in this 1031 DST side has provided then what we call sort of a knock on business, in that folks are looking for more passive. Where else can I get some more passive investments? And so LinkedIn's been this incredible conduit for us to find people that are syndicating some of these deals and to really rub our due diligence against those deals and those folks and like, all right, who's best? Who can we use for our folks? And we won't just stop there. We'll go beyond. Like, we're very big into oil and gas. We spent a ton of time on the oil and gas side. We're looking at small startup businesses, funds of that nature to provide more passive income. So there's no extent or place we won't go or find great investments. We'll arrange it all.
I find what you're saying here about the types of people that can use the services that you offer. Oftentimes, let's take farmers, for example. We used to have a little homestead. And so we have a lot of friends who are homesteaders, farmers, right? And they're running these businesses selling pasture, meat, and eggs, and things like this. And they're really not making any money in the business. It's basically barely holding even, but they're not renting their land. They're sitting on land. And if it's not family land, it's something they're looking to sell, this piece of real estate is usually the biggest source of wealth and net worth for them. And they go to sell this thing when they want to retire or pass it on to somebody else to take a turn. And if they haven't done a good job of running their farming business separately from their real estate business, then it looks like they're not really doing much. But if they can separate those two businesses and start thinking about their real estate as this wealth building asset and the ability to move it and save on taxes, because I think a lot of people are sitting on one or two real estate deals that have the ability to change their lives. And that's what I mean. You're going for the point thinking like, oh, I'm not that high net worth rich person. But sometimes one asset sale forces you out of your way of thinking that I'm just a regular Midwestern farmer or I'm just a stay at home mom or whatever. And suddenly you're sitting on a pile of cash that you don't know how to handle from a tax point of view. You don't know how to handle from a wealth point of view. And it's surprising how many people call me up and say, I'm sitting on a giant piece of land that's worth $2 million, or we just exited and now we're sitting on $1.5 million and we don't know what to do. We want to go passive. We want to build like legacy wealth, generational wealth. It's such a big change of mindset that they're so afraid to screw it up. So tell me a little bit about that person and helping that person.
I feel for our farmer friends in a really big way, in that it is at first, it is an identity thing first, not an economic thing. So they are farmers, right? And this is the part that I think all of us in my space need to sort of respect and understand is I can come to you with a spreadsheet and I can repeat exactly what you just said, Emma. You're not making any money. Some folks do not want to hear that message. Or I'm coming to you and saying we can do a lot better on economics with folks that frankly is very passive type of investments where you're not doing anything. So what are we talking about? Why are we doing this? And so it's a very sensitive conversation for us to have. And so we sort of start a lot of those conversations with, what do you want when you pass? What are your intentions? What are your heirs going to do? Why are you working the land? What are we trying to accomplish? And it was when we try our best to have folks step back from that day to day and even step back from that identity and say, okay, well, here's what I really want. It's okay. Now let's get a spreadsheet out. If that aligns with what we can offer you as a firm, we can take you passive, probably increase your income, make this easier for your heirs if they don't intend on farming this land in the future or owning it in the future. We're going to make that transition easier for them, and we're probably going to increase your wealth. So if you're ready for that, if you've gotten over that mindset that I am attached to this land, then we're ready to pull the spreadsheet out and we're ready to kind of dig in and dive in. But until we get over that hurdle, and for some people, they'll never get over that hurdle. And that's okay. Like, I'm not, no qualms about that. Like, it's your life, man. It's short. Do what you want to do. If you want to work the land, great. If you want your family to work the land, great. If that's your identity, it's really important work that you're doing. Appreciate it. Thank you. Thank you for feeding me and my family. I appreciate it. Keep doing what you're doing. It's great. But if you're looking at it like, no, there's an anxiety there. And then, as you said too, Emma, there's a fear of the unknown. They don't know that, oh, wait, I thought you could only use 1031 exchange to buy more farmland. Let's do that. What's this Delaware Trust Statutory? What the heck are you talking about? What's that thing? Right? Oh, I can own commercial property like this and I don't have to do anything. I don't have to worry about tenants, things of that nature. Really? They didn't know that. And so our game becomes a huge awareness game And I just being really sensitive to people's perspective and understanding that because I am not a farmer. I did not grow up a farm. I'm from Wisconsin. People think I'm from New Jersey. So there's a connection there that we have to make first. And then we can start talking about solutions.
Well, it's not just farmers. When I got into multifamily investing, I was surprised how many of the apartment buildings that we were personally looking at, because at that when we first started, we weren't looking at buildings that were 250 units costing $20 million. We were looking at 12 units and 40 units and things like that. And most of the owners that we spoke to were mom and pop, single owners, maybe owned it free and clear. And they were just getting older, some of them in their 70s. And they retired from their jobs at 60, 65, but they still had this property that they were running, and their kids don't want it. And their kids have no idea how to run it. And so we had one we took over from an estate where they had been having their family member run it for a few years during the declining years of the owner. And by the time she passed away and it went into the estate and the books were opened to the executor, there was a lot of shock about
Yeah.
how poorly this was being run.
Yeah.
And the kids all looked at each other like, I have no idea what to do. I
Yeah.
don't know how to fix this. I don't know how to run this. We're just going to have to sell it, because the owner just assumed that her children were going to take it over for her and hadn't made those plans. And so, talk to us about the typical kind of person that comes in and is looking for help. And I want to hear how you identifying with your ideal client and thinking to yourself, wait a second, this could be me, how that's changed your life.
Yeah, and in a big way to watch people and most of the people we talk to are self-made folks that have created wealth for themselves independently, which is amazing to sort of watch and see. And that's built into some of that the way in which you identify yourself. And what I mentioned about what about farmers and landowners is somewhat similar to folks that own and operate real estate. They view themselves as their business. So it's very interesting to sort of think about that. What you said is important though, that you really need to sit down with your family and have these conversations about what happens next. Because there's no reason with what we're offering and the construct of 1031 exchange and the step up in basis that you get from assets, there's no reason that your heirs should fall into the situation that you just described, where they're holding on to an underperforming building and they don't know what to do with it. No reason you need to leave them in that position. Zero, right? So we can get them to a place where you don't have to do that, but you can still get all the benefits from a tax perspective of real estate without all the hassles of dealing with it. Same for your heirs, right? Heirs get a step up in basis, they start getting the checks that you were getting from the DST structure, right? So there's no reason to sort of be in that position. So it's an important conversation for us to have. We play pseudo financial planner with some of our clients who didn't come in expecting to have a financial planning meeting at all, and very adverse, like, oh no, yuck, financial planning, financial people, gross. But we sort of sneak that conversation in there for their own good and to say, all right, this is the time to have it. And I watch, interestingly enough, I watch couples sit there and have that conversation for the first time ever too. And that's interesting. And so I got to kind of step back a little bit and just kind of let that
Ouch.
go. I'll let that go for like 5 or 10
Ouch.
minutes and let them kind of hash this out. They've never talked about these things. They've
Yeah.
never talked about what they want to do for the next 15 years of their lives or how to use these assets or what this looks like for their heirs or who gets what. They've never had this conversation. And I'm like, well, do you have a trust? Like, have you had a succession plan? They're like, no, we haven't had that conversation either. I'm like, oh boy, we got a lot to talk about before I start showing you real estate deals. We got a lot to talk about. And so it's good that it's good to have that conversation then, as opposed to having that conversation with their heirs when they're already gone.
This is a difficult conversation. I had a friend of mine from Israel telling me one day, he said, "You Americans are weird about money."
Yes.
Why? Well, we don't want to talk about money, but even more so, we don't really want to talk about death. But when you put money and death together, it's a
Yeah.
conversation that just tends to not happen, because I've heard it on both sides. Like, my mom didn't want to have the conversation because she had cancer at a very young age,
Oh,
and she felt like having that end of life conversation was reaffirming the fact that she was gonna die, and sh mentally, she didn't want to admit that. She wasn't ready to admit that, and she knew what at that point that my father would outlive her, so she just put it all on him to handle, and he did,
yeah.
but he was very good about having the conversation with us before he passed away. But I would hear people say to him, "We don't need to talk about this right now. You just need to worry about being healthy. You just need to." So he was trying to communicate this with people,
Mhm.
but it wasn't going anywhere. So I had a sister actually call him up and say, "I'm gonna record this conversation, and I just want you to tell me in plain English exactly what you want to have happen after you pass away." And they talked for an hour, 2 hours. And that was what we were able to use as our basis to get legal documents done or redone after he passed
Yep.
away. Because even though he tried to do it, people tried to talk him out of it. And this conversation about money and death is culturally very uncomfortable for us. So, what do you see people are having to do or get to that point where they can finally come into your office and think this conversation needs to be had? Are they in there for something other than that? And they realize that they're missing something? Are they usually starting somewhere else?
Yeah, I had a phone call I'll give you an example. I had a phone call this morning with a potential client, and he has gone from 2 to 10 million in real estate value over the course of a decade, already retired from a previous W-2. I'm literally looking at my notes on the other screen. And what he wanted to talk about is how to get more passive. So he came in with that goal, and immediately we started talking about, what is your succession plan? How important is legacy wealth for you? Do you have kids? In this case, he did not have children. He has nieces and nephews. I'm like, okay, what does that mean to you? And then if that's not number one primary source, what do you want to do with the money for the next, let's say 10, 15, 20 years? Relatively younger person. What do you want to do for the money for the next 20, 30 years? Didn't expect to have that conversation. So they come seeking one thing, but these are things that are all connected. And so it is, even from a regulatory perspective, it's incumbent upon us to have that conversation. So I got to ask, one way or another, I'm going to ask you. And so I will do my best to pry some of those answers out because they're just good for you. Right. And it's going to make the situation better.
Do you find that most people are reaching out to you about passive income to come in and say, "Hey, I've built up this thing. I'm middle-aged. I need to get more passive income because I know I can't work forever." Is that what it starts out as typically?
It's more problem first. So I'll stick with this fellow this morning because it's very typical. It's like, I'm sick of, God bless them, but I'm sick of tenants calling me and yelling at me. His words, not mine, right? And so
Yep, yep.
it's usually problem first. It could be a health issue.
Okay.
It could be just general irritation of like, I just don't want to do this anymore. Because running
Yeah.
these properties is real work. So whoever said we can make real estate passive, but somebody in there is doing the work, the hard work on the ground,
Yeah.
right? Nothing about
Yeah.
it is truly passive. And so they feel that. And it's usually a burnout kind of thing. It's 20, 30 years of doing this, and it wears on people. And they want to solve that problem. And they're just not quite sure
Mhm.
how to solve it. And so they'll walk down a
Okay.
list of solutions to try and get there. And it usually starts with, well, why don't I just buy a triple net Lowe's or a Taco Bell or a Chick-fil-A or something like that, right? It kind of starts there. And then it can evolve into, no, actually, we got like a giant suite of options. That might be part of it, frankly. We have a giant suite of options that we can consider. And then that becomes eye opening.
So this is interesting because somebody said to me recently, he is 100% invested in the stock market. I like the stock market. I own stock. So let's just get that out of the way. And I know a lot of very wealthy people who invest in the stock market. And especially if they're really good at doing, say, options, they have made a lot of money on the stock market. So I don't want this to come across as dogging on the stock market at all. He is 100% in the stock market. And he said to me, "I don't understand why you're so into this real estate thing because after they get old and they can't run this real estate anymore, they have to liquidate it and they just end up in the market anyway." And I sat there and I thought, who told him that? Where did he get this information? Because most of my network that is retiring from owning active real estate
Mhm.
properties that they're managing don't end up back in the market. So that suite of options that you're talking about, tell us what that looks like. What are the top 3 that they usually, after they have a consultation with you, turn around and say, "You know what? Actually, I'm gonna do these."
Yep. So there's a few different ways that they can shift to passive and stay in real estate. The primary tool we use is Delaware Statutory Trust, or DST. And quickly on that, think of that as, it's a syndication wrapper around real estate, usually very large properties, 50 million plus in value, very stabilized, cash flow day one. So no value add type of components here. So moderate return pattern is what you sort of expect from that. What's great about that is you can minimize, the minimum investments are low. So usually 100K minimums. So right away I can sort of build, we like to say kind of build your own REIT a little bit. So you can kind of build your own portfolio in that way. And that's very clean. The IRS 2004 revenue ruling said, hey, this is compliant in a 1031 exchange. So I can do my basic 1031 exchange. DST is the replacement property. It's passive. They send you a check. It's nothing for you to do. Tax treatment is extremely similar to owning real estate direct. So we start there as a solution.
Mhm.
And then
Mhm.
from there, we can also look at the precursor to DST, tenant in common. That's if we want a little bit more in the real estate, a little bit more juice to that property. You can do value add in that structure. Comes with some drawbacks. The debt's usually recourse there. And then you usually have to have a group of people make a decision. There's voting rights for investors, which sounds like you have more control. Actually, you have 30 people in a tick, and there's always that one person who doesn't want to do it. And so investors have kind of drifted away from that from a passivity perspective. But if we want a little bit better return pattern, that's a route that we can look at. And then, like I mentioned before, I think a clean stepping stone for people is to think about, well, I still want control and I still really want to manage real estate a little bit. I just want less hassle. They'll go from being very
Mhm.
active, say multifamily, they'll go to triple net lease. And so they'll
Mhm.
buy a strip mall, they'll buy the Chick-fil-A's, the Taco Bells, they'll buy a Lowe's, they'll buy something triple net where they don't have that sort of day-to-day management aspects. They'll start there because they get the biggest hurdles that we hear are folks that are active are, wait, I'm going to go into this DST thing and I have no control. I have
Yeah.
no voting rights, and we don't know for sure when the syndicator or sponsor is going to sell it. Ooh, that makes me nervous.
Yeah.
Ooh, so they'll take a stepping stone. And come to find out, folks I had conversations about like that 2, 3 years ago, there are people that are calling me now going, well, actually,
Yeah.
I do want that passivity. It actually sounds like kind of fun because I still have things to deal with in the triple net sphere
Yes.
that I'm responsible for. I have a debt load that I'm
Mhm.
responsible for. I have a tenant and leasing that I'm responsible for. Also not passive, right? No real estate is passive is sort of the mantra that we're taking here. But those are the three stepping
Mhm.
stones that people take to go kind of from active to passive. And all of it doesn't
Mhm.
mean that you're going to end up in the market. And what's sad to us though is this was a study, I believe it was done by UCLA on just on 1031 exchange. What they found, and even for people who have done one before, 90% of them end up eventually paying the tax while they're alive. And so what your friend said that's in the market is actually true. In actuality, is actually happening. Folks are cashing out and paying the tax and investing in the market, but they don't have to. So when I heard that study, like my little cold like Grinch heart got sad and shrunk even more. I got really like, I'm like, oh no, why is this happening to people? This makes me so sad, but it just doesn't have to. So yeah, there's no reason you have to cash out unless you really want to. You can always do that.
I find people are perfectly willing to give up control in the stock market because nobody's inviting us to board meetings. We don't get votes. I mean, there are some stocks that do allow shareholder meetings and voting, a few of them. But for
Yeah.
the most part, we have zero input. Zero.
Yeah.
But we're fine giving up that control. So to me, thinking, okay, how can I give up control but not give up the asset class in its entirety so that I can remain more diversified? So tell me about that trust and control issue because I run into the person that you're talking about frequently call me and say something like, I don't know what to do. I'm sitting on 10 or 11 or $12 million worth of equity. I own 40 rental houses. I quit my job 10 years ago. And now I own a property management company is basically what I do. And I don't know how to get out of it because I don't want to get out of it. I don't want to give up control. And so they're really calling to see if they can give up control to me. And oftentimes the answer is no. They're like, I can't do it. I can't do it. So that transition that people are going to from I can't give up control to I recognize that to be totally retired on 100% passive income, I need to give up 100% of the control other than the decision making process of what to invest in. But after the money's placed, I'm out. So what does that process look like for most people?
Yeah, it's really interesting you mentioned that because very often you'll hear this when you're talking to somebody about doing the exchange. They'll do, I'll just pay the tax. I don't know why they do that, make that noise. They're like, I'll
Yes.
just pay the tax. Well, cool. What are you going to do with it? And then
Yep.
the answer is, I don't know.
Sit
And
on a pile
and
of
it's very,
cash.
yeah, what's going to happen next? Eventually, you're going to make an investment decision one way or the other. And you bring up a great point about stocks in the market is not only do we not have control, I challenge you to understand how Apple works. I challenge you to understand, insert any company here to really go ahead, pick up and read their financial statements. I challenge you to explain to me how this company makes or doesn't make money. Because I know it. I've worked in some of these large companies before who are publicly traded. The financial statements say this, and I can tell you what happens in the inside. It ain't what happens in the financial statements. These are two different
They're
things.
pretty.
So you can read till your face is blue, and it ain't there, right? It's not there unless you're actually in the company. Even if you're inside of the company, it's still challenging to understand how it works, unless you're operating at a pretty high level. So here we have an investment that A, we have no control over, and B, we can't understand.
Mhm.
Juxtaposed to going down the real estate route, even the passive side, In the DST, the assets aren't changing. It's not a REIT. Like I have an address. I know what the property is. I can do my homework on that. If it's a triple net, it's triple net's inside a DST. I can understand who the tenant is. I can do that homework.
Mhm.
If it's multifamily, I have rent rolls. I have an appraisal. I have environmentals. Like the due diligence package on DST is robust. And it's because the sponsor or syndicator has already acquired the property before bringing on investors. So I literally know almost everything there is to know about that piece of property. And I can do that homework. It makes me feel pretty good. Now I have at
Yeah.
least an ounce of control to understand what it is I'm investing in. And then, oh, by the way, I can understand that company too. I have their full track record. It's in every offering document that companies put out in this space. Their full cycle track record and deals that are active, and notes too of things that didn't go right. It's very robust. It just happens to be on page 305 of the PPM. No one reads it,
No.
right? So it's incumbent there. You can do some reading and add some value, right?
That's where the control is. The
That's
control
what the
isn't doing
control
the
is.
due diligence on the front end.
Yeah, exactly. And so that's always the response that I give to folks is we can control this decision in a
Mhm.
big way. And so let's control this decision right now. I can't control this decision 3 years from now, but I can control this decision and we can make a pretty good one. So let's give that a shot. And oh, by the way, if you're not comfortable with that tax bill, the tax bill is usually 30 to 40% of your equity value. Think about what you need to do in that next investment to make up that hole. It's pretty
Yes.
substantial.
Well, why do you think that these substantial tax benefits exist in the tax code in the first place? And I'll give you some background on why I'm asking this question. I heard a story on NPR where I think it was some business owner, sports team owner, something like this. And there was just a lot of outcry on all of the tax that they weren't paying. Basically, you know how we say if we're getting a refund, we're giving the government an interest free loan. Well, the story said the opposite. Like, we're essentially, when we're not paying those taxes, we're taking a loan from the government on the taxes that we owe, and I had never heard it put that way
Yeah.
before, and there was just this outcry of business owners who were taking advantage of the tax code to not pay tax, but they're rich business owners, they're trillionaires, and I remember sitting there thinking to myself, "This story is designed to outrage me,"
Yes.
but instead I'm sitting here thinking, "What are they investing in that I should be investing in?"
Same way, like when we discovered some of the intangible drilling costs, tax benefits from investing in oil and gas, our
Mhm.
heads kind of exploded like, oh boy,
Yeah.
like I can kind of use this. The ability to use those losses across other forms of income is really interesting. So I think here's my layman's view of this. The tax code exists in a way in which it encourages certain behavior. And we can agree or disagree with that if we want, philosophically. Go ahead if you want to do that. In the meantime, I kind of take the same stance you do. I'm like, I want to find as many of those benefits as I can and do those things. So the intangible drilling deduction is designed so people take risk in drilling because unfortunately, despite what we hear in the media, we still need oil and gas to run our economy and make our quality of life better. I don't know if folks have noticed, but over the past 2 to 300 years, quality of life in the world has dramatically increased. Not sure if people like notice that. I think we need to take a little bit longer term perspective every once in a while. So I think if folks would do that, they'd see that some of the tax benefits are there to do that. Same thing with owning real estate, right? It's hard to own real estate. And so you mentioned some of the underperforming properties you found in a trust from one of your friends or clients you're dealing with.
Mhm.
It's not easy. And so the tax benefits are there to incentivize you to attack to attack a need that we have is to have housing, right? We need to have it. Someone needs to do it, and it's rough. And so what do we do in the tax code? Well, we make benefits for doing that. And so that's in the same way of owning a business, right? Owning a business is risky, but it delivers jobs, and it delivers value. So we can have the stories that outrage us, I guess. But at the end of the day, that's kind of the way these things are constructed. Is it perfect? No, it's not. But at the same time, there are intangible benefits there that I think we overlook maybe sometimes when we hear some of those stories.
Yeah, I lived in Eastern Europe in 1995
Oh,
in a government building.
I'll mute myself. Go ahead. You
Um,
tell that.
I just look at that experience as how much it has colored my capitalist entrepreneurial view, spending time in a country that was recovering from communism,
Yeah.
living in government housing, and just watching the way things worked. And I will say it was a smaller country, so their bureaucracy was great, actually. Their bureaucracy functioned well in a small country with a small population where most people are clustered around those population centers. So we have a lot to learn from their bureaucracy, and that was definitely eye-opening, and we have a lot to learn from socialism in general. But at the same time, walking away from that experience was like I want to provide the kind of housing that I want to provide for people to be able to live in and it doesn't look like this government administered stuff.
Exactly. I encourage, if you're angry at capitalism, maybe get a little history of the world. Maybe
Yeah,
travel. Maybe
yeah.
travel. Now maybe that'll
Go live in a
broaden your
post-communist apartment building for a couple of months or a year and tell me what you think. I didn't like it.
on any perspective you have. It would be valuable to just do some more homework and learn a little bit about world history. It'd be good. I like to say all the time when people are complaining, it's never been a better time to be a human being than right now. And so we got to have that perspective. And from two metrics: one, life expectancy, never been higher, even with COVID across the world. And the rate at which people are extremely impoverished, never been lower, ever in the history of the world. So I don't know, explain to me what we're really angry about, because things are going pretty well, not perfect. A lot of bad stuff going on still, but bad stuff's been happening forever, unfortunately. We'll keep working on that as a society, but let's a little bask in the glory for a second and say, hey, things are pretty good.
The money's gonna get spent somewhere. It's either gonna get spent by us promoting the economic activity that the government wants to promote,
Mhm.
or it's going to get spent by them in the form of taxes. And as long as they're incentivizing the way that they want it spent, it's almost a passive investment on their part. Like, instead of charging us the taxes, they're going to leave the money in our pocket to incentivize that behavior to go and do what they don't want to do, or we're better equipped to do, or more efficient to do, or whatever the reasoning is behind it. We're giving it's like a passive tax that we're paying. We'll just put it that way.
Yeah, maybe that's a good way to put it. I think that's no, that's really well said. I would ask anybody, regardless of their political outlook, who do you trust to do? Who do you trust to be a private equity firm? Us, public, or the government? You can't tell me the government's had a great track record of making awesome investments. At least our government. You can't tell me that.
I
But
think that's the crux of the argument right there, because when we have political discussions with our friends, we all want the same things. We want
yeah,
people to live in clean, safe buildings, happiness, spend more time with their family. We all want the same stuff. But what it always boils down to is, who do we trust to administrate these things? And there's a difference of opinion there, and I respect that.
interesting.
I just feel like my opinion is what I'm acting on. The part that I'm taking reflects those values that I have the right to have, and I respect the right that somebody else has a different opinion there. But that's really what it boils down to. Who do we trust to administer these things? And again, it's giving up control either way. We're talking about trust and control a lot in this episode. It's giving up
Yeah,
control either to the private equity firm or the public equity firm, if we want to refer to it as such.
yeah,
Where are we trusting control? And is it good to maybe have a little bit of diversification there across some government, public, and private entities that
yeah.
do joint public and private projects?
I don't know if I would trust. I live in Milwaukee, and we've done a lot of renovations on our highways. I don't know if I would trust. I'm good with the government building highways. I think you guys do a pretty good job of that, at least around us. I'll let you do that. That's okay.
Yeah.
Trust you to do that. I don't know if I trust you to build high rise housing downtown or develop our downtown area, which hasn't been done. I'm 42 years old. I've lived here basically my whole life. We're finally starting to do some real development downtown.
Mhm.
So I've been waiting, and it hasn't happened because it's been very purple area and it's been locked in debate for decades upon
Mhm.
decades what we should do. That's not very efficient. In the meantime, we've watched our state stagnate in terms of population and talent. We're one of the lowest of all metros. We're one of the lowest tech talent areas in the entire country. That's not cool. Doesn't make any sense. Like, we have a world class university in Madison in our West. That talent should be flocking to Milwaukee. So I don't trust them to run our city real well. So yeah, you're right. Maybe some diversity there would be living in Milwaukee. Brandon complained about Milwaukee episode. Sorry, everyone. I love our city, man. I want the same. Hey, we all want the same thing, just as you said. We all want thriving areas.
Yeah, I can't wait for the YouTube comments on this one. So I
Oh no.
you can't really discuss economics and taxes without discussing politics. And one
Yeah.
thing that I really believe in is that we can have open, honest political discussions with differences of opinion and still be able to work together to reach the common goals that we
Yeah,
have.
I would join you on that. I'm a big believer in that as well. We need it because we have real issues and problems to deal with. Somebody smarter than me said we really need to have these debates. Like, for example, what's going to be the policy on self-driving cars? That's coming. It's here. And are we able to work together to kind of solve that issue? I don't know. It makes me nervous that we're not able to come up with common sense policies to be arguing about silly stuff and trying to score points for that. I don't like that. We do have real issues we got to deal with, and we need difference of opinion. We need debate. Sort of the way this is supposed to work, I thought, in our country. Isn't that what we do? We debate things and then make decisions. And I thought that's the way it's supposed to work. Maybe that's the way I thought it was supposed to work. I don't know.
It should be, but I'll give you an example and kind of bringing it back around to the topic of personal wealth
Yeah.
building. I had a close friend of mine who was very active in a political campaign and was spending a lot of time posting on social about the campaign, wearing the button, doing the door knocking and the flyers. And I didn't live in that jurisdiction, so I had no dog in that political battle. And I just asked her, I said, "You're spending a lot of time on this. Tell me about that." Like, I wanna hear it from your point of view, and she was just very passionate about this issue, and it just after listening to her talk, I thought, "They're kinda using you as a unpaid volunteer canvasser for their cause, but you're really trying to affect change." And I this is terrible. I don't even know if I should admit out loud that I thought this, much less said it to somebody, and now I'm gonna say it on a podcast.
But now I'm
So if
really,
you
now
wanna
you got
have
to say it. We can't let that go. You got to tell us.
If you wanna have real control and real power, you need to build wealth first. And all the time that you're spending knocking doors, passing out free flyers is for the person who's above you who's gonna be making those decisions on your behalf. And she sat back and she thought, "Oh, that's ugly, but it's so true." And she really started focusing on building her business and building her wealth so that she could be more involved politically in her party and her issues of choice. And it's sad, and maybe that's one of the things that we're referring to that's not that great about the system that we're running, but that's a system that we're in. And if we want to change it, I feel like we need to be in some sort of position of influence. And wealth is one of the paths.
I don't disagree. I mean, it's the reality that's sort of in front of us. It's a way to get in the room because you need to get in the room and be involved in the conversation. Well, I encourage people to be involved in that way. Like, I think we spend, yeah, this is bad. You're going to hear my political ramblings now. You didn't know we were going
I
down this
started
road.
it. Don't worry.
Uh-oh, watch out. Here we go. I think we spend a lot of time. I think what I hear a lot is, oh, make sure you get out and vote. Like, yeah, but make sure you go get involved in these actual issues and start at a local level of really involving yourself and just know who your representatives are. I've had breakfast with our state representatives before, right? Without an agenda either. Just like, hey, who are you? What do you do? You represent me. I'm curious. And so I just encourage people to go and do that, at least know who these folks are and start there. There's where you can actually start to have some value in doing that and engage a conversation, right? There's very active issues at the state level here in Wisconsin. And so I share my opinion because I've had that conversation with our representatives, right? And so that to me is a more, at least a more simpler and proactive way for you to be involved, is to be involved and to start local and to do that. Otherwise it just feels like it's entertainment for some folks. And I don't know if that's productive. In fact, no, that isn't. Let's say this, that isn't productive,
It's
right?
not productive. No.
Let's not do that. But let's be involved and be involved in a real way. How's that sound?
I did hear, I was probably in college at the time, a quote one time that activism is more important than voting. And that stopped me in my tracks because
Probably,
activism
probably.
is getting out there and being involved.
That's probably right. It's probably right. I mean, honestly, here we go again. I'm going to do it. So I don't feel a lot of value when I go to the voting box, especially as I go up the ladder. I don't feel like, I'm like, well, why am I here? And I'm in the purplest of purple states in the country,
Yeah,
right?
it's true.
Our elections swing 20,000 votes either way at the top level. I still don't feel like I'm making any impact by going to that booth. I'm making more impact by having breakfast with my local reps. That means more to me.
Let's take that analogy to the kind of person that you like to help. It's not the megalomaniac narcissist who wants to amass political power to himself. I find
Not
that
usually. Not usually.
well, you never know.
You never know.
But yeah, but the kind of people, I'll give you an example. I called one of my investors recently and I said, "Hey, we've got a new deal out. Do you want me to put you down for a soft commitment?" And he said, "Actually, I'm really only doing local investments right now because I really want to build up my local community. And I'm thinking about running for a local office. And I really just want to dive every resource I have into my local community here." And I sat back and I thought, can I just be you when I grow up? It was just a beautiful sentiment. So I imagine that a lot of your clients and the people that you're talking to have similar aspirations when they start to glimmer that mindset shift like, oh, I'm actually kind of wealthy. How do I want to be? What kind of person do I want to be? If I can save more money on taxes so that I can then take that money and go out and invest it in these kinds of things, they're probably thinking a lot more about impact investing than they were at the beginning when they were just trying to keep the lights on and feed their kids.
Yeah, we make this a million things going through my mind. So we sort of make this delineation for people when we look at opportunity zones, which we didn't talk much about, but we will dabble in that area as well. And so we make that distinction for folks that there's a law. The law was written a certain way. There's certain tracts of the country that are opportunity zones. There's certain projects that are labeled opportunity zone, but man, they don't look like it. They just don't look like an opportunity zone. So it's not really adding value to the community. So it is a filter for us on those investments to sort of make that distinction for our clients to say, yeah, this property over here says OZ, but it doesn't really feel like that. Juxtaposed to this other group who's added value to these communities in the past before opportunity zones existed. Does that sound more interesting to you? It sounds more
Mhm.
interesting to us if it's the spirit of the law behind the letter of the law. So we'll engage conversations in that way in thinking about, yes, we believe that you can do good and make money and add value for your community. I think you can do all that at the same time. We really do believe that. So it is a bit of a filter for us a little bit in thinking of our criteria. When I think about our clients and the kind of people they want to become, a lot of them have already become those people. These are generally speaking very high moral type folks that really care about others. And we see that in the way that they run their business and the way they run their lives. In a way, a lot of our clients are very inspiring to just spend time with. I feel honored just to service them, frankly. And then I find myself like, oh, yeah, but I should probably work harder to do that. Or I should probably spend more time adding value here for folks. It's very, in very ways, it's very inspirational for us to think about the value they're adding for our lives at the same time we're delivering value for them.
Oh, this is so true. I find that the more time I spend with people who don't have to think about keeping the lights on and feeding their children because it's already taken care of through either passive income or a hands off business, there are different ways to do it, residual, passive. They start thinking about things that inspire me. And I had somebody say once, "Why do you want to do this investment?" I was overhearing this conversation and he said, "I want to do this because I want to be rich." And he said, "Well, why do you want to be rich?" And then he got this kind of canned answer. He said, "Because I want to help people. I want to be able to do this. I want to be able to do that. I want to build houses that have accessibility for people with disabilities because my mom's in a wheelchair or something like this." And he was almost getting emotional talking about it. And the guy, we were at a conference and he was counseling with him. And he just starts waving his hand. He said, "No, no, no, no. Cut through the crap. Cut through the crap, man." He goes, "If you really wanted to do that, you'd be doing it right now. Why aren't you doing it right now?" And he said, "Well, because I don't have the money." He goes, "Money is an excuse." He says, "You go live your best life right now and you'll figure out a way to find the money, whether you make it, earn it, raise it from other people, whatever you have to do to make this happen. Go make that happen right now. Because if that's what you really wanted, that's what you'd be doing." And I thought, okay, how do I spend more time being the person that I want to be instead of always pushing it off into the future when I have more money, when I have more time, when I have more this or
Yeah.
less that? Do you're hanging out with a lot of people who are already walking that talk.
We are. We are. And that's very true. And I'd be curious, curious to extend that story. I'm curious what that guy did. He said he was trying to add value for others. Did he go
He
out
was
and do that? Or
chagrined.
was it really like, yeah, I don't really want to do that, but it sounds nice.
Yeah, sounds
Yeah.
nice when I'm rich, when it's easy, when I don't have to
Yeah.
try as hard because money's like Kleenex at that point. Well, are you gonna
Yeah.
do it when money's very dear, when money's very precious, or are you gonna wait until
Yeah.
money feels like Kleenex?
Yeah. And we encourage I have one teenage daughter and one that is in college. And we encourage them, even with their meager income at this point, how much are you giving to charity? Because there's some component of that that is discretionary, and build that habit today and now and do those things today so that in the future, when it is money is like Kleenex, hopefully it becomes, and then it's even more impactful for you. You're like, oh, I can do more. I can do a lot more. How do I push the envelope on that? And then we think a lot about, like in our family, we've been lean. We had children very young, and money was not. We were trying to find the Kleenex, much less the money. And so there's other things you can do, like give your time. And so we're very involved in our church and our community. I serve on the board currently of a homeless shelter here in Milwaukee. Give time and treasure, right? So do both. There's no reason you can't do that now. So you're absolutely right. Like money isn't sort of that obstacle per se. It's more of a mindset. And it's just these places. I mean, we need people. I need more people on our board. Shout out, put that in as a little advertisement. I mean, we need people to come and add value, not only from a financial perspective, but with their time and expertise. That's needed everywhere. And we have one of those. You either got some cash or you've got some value that you can add to any organization. So just go do that.
Yeah, I don't know if we were planning on having kind of a lifestyle inspirational discussion as we talked about the tax code, but I think that what you said before about the
Yeah.
tax code is there to incentivize certain behaviors. It's these behaviors that it's there to incentivize.
Well, it's just kind of ironic because what happened is we end up having a life conversation where we're going to talk about money. These two things that are intertwined is very similar to the conversations I have with my clients. We end up having a different conversation, probably more meaningful, frankly, than what you intended to have a conversation about because all these things are tied together. I was having this conversation with one of my one of sort of my peers that I respect a lot. This business is personal. All of it is. It's very personal. So anyone who wants to separate that, I think, is wildly crazy. This is a very personal endeavor. I spend most of my time doing this away from my family. So you better believe it's personal. And I know for the clients that come and talk to us, I know their work is personal. That's not a business to them, it's an identity. So this stuff's important. And so these things are intertwined. We can't separate them. Even though I think the general societal expectation is business, not personal, business over here, family over there. No way. All this stuff is linked. And so it's natural that we have these conversations.
I agree. You're the person in private that you are in public.
This
I
is
mean,
it. It's no different.
tell me about what that feels like for you because I had a realization several years ago when I was first starting to have some success with my real estate investing business, and people were wanting to take me out to a free lunch or ask me lots of questions. And one day I was asking somebody some questions about why he wanted to do this because it's hard and you need to have a good reason behind why you're doing it because it does take some effort and it takes some ability to mentally withstand the risks that we take and setbacks. And he started describing really one of those beautiful kind of sentiments about the kind of lifestyle that he was trying to create for himself and his family and his neighborhood. And I thought to myself, if I help him, he's going to go off and create that. And he's going to help other people. And that other person is going to have this beautiful vision of life. And I saw before me like this army of philanthropists and impact investors and impact business owners that I thought I can be a ripple here to help this. And you're a very key player in that part because as people are on the precipice of really recognizing, realizing their true wealth from a financial standpoint, you're building an army of people who are out there to go do good and their intentions can now be matched by their resources. So tell me about what that looks like for you.
Here's what I thought about what you just said. And it's the only thing that, or one of the very few things that I actually heard from Grant Cardone that I liked. Sorry, Grant, was you have an obligation to create wealth for yourself. I feel like I have an obligation. Why? Because I can. So I will go to the homeless shelter I mentioned. It's called Repairs of the Breach. It's a daytime homeless shelter in Milwaukee. I will go there and I'll stand in the middle of the floor with our members and I will look across the room and over half the people in that room can't do it. It's not a matter of working harder. It's not a matter of this or that. They can't do it and they need our help. I can. So what am I going to say? I'm not going to do that. I'm not going to help people. I'm not going to grow my wealth. I'm not going to be that, in essence, a force multiplier that you described yourself as a bit, Emma, right? I'm not going to do that.
That's a good term. Yeah.
When these folks clearly can't do it, the goals of some of our members are to get on monthly disability. That's $900 a month. That to them is wealth. And to me, I'm going, man, my friend can do so much more. I know you can. And so for some of our members, yes, you can. As a side note, we'll work with them to do that. But for a lot of our members, there's so much addiction, mental health issues that it's not possible. We have to, and I feel obligated to serve them. And then thus juxtapose, I feel obligated to go and do it because God has given me the mental capacity to do that. And I can't. I'm like, okay, so I better do something with it. Or otherwise, what am I doing here? Right? What's the point?
Yeah.
Why am I
Yeah.
here? I don't know. What am I supposed to do? No. So I don't know if that answers your question. That was sort of what I thought about, like my spin on it is that we're sort of obligated.
That's a good point. I feel like sometimes people say that about their business. Like, I'm obligated to share this message that can help people, and in return, they will pay me. And it always seems like it takes the altruism down a notch when you feel obligated to share the message because I feel obligated to share my message. I really, really do. Like, I want to help people build wealth and get passive income, but I'm also going to make some money on the management fees for our fund. And so I just try to be super transparent about that. Would I do this for free? I would do most of it for free. The down in the nitty-gritty stuff, like some of that, I just need to get paid for. So how do you balance that?
Yeah, I don't think getting paid is bad. So I kind of spent it that way in that I don't think the fact that we make money on what we do is being a bad thing. In fact, I think of it as a motivating thing. Unfortunately, our conversation about sort of the way capitalism works is, in my mind, and by no means am I an economist or a mental health or a behavioralist by any stretch of the imagination, but I see how people operate. When we have aligned interest, man, fields seem to do a pretty darn good job. They do a better job than they do when they don't have aligned interest in economics. So it's unfortunately sort of the way that human beings act. I am also still a human being. And so I behave in the same sort of ways as well. So there's a lot of things that I do that I don't get paid for. And I add value for other folks that don't get paid for. We share a lot of information for free, right? About the various topics and things that we've discussed here in this recording and the stuff that we share socially online. All that's free. We do a podcast too, free, right? So we are sharing a lot of this stuff for free, but it's all sort of made possible by economic incentive. And I expect people to sort of behave that way. I'm going to continue to behave that way. And I just don't think it's a bad thing, though. I think that things are tied together. I think we can have economics and have good motivations and intentions all at the same time.
Well, I think that a lot less good free education, free information would be out there if there wasn't down the road some sort of economic incentive, because this stuff not only takes a lot of time, a lot of work, but can be expensive to produce and host. And so I
Yeah.
feel like as long as we understand, like, we're giving, eventually somebody will want to pay us to do something. To me, that's kind of how I think the modern business works. We're all media companies in a sense. We're all putting out a lot of free information, spending a lot of time educating our potential clients, educating our actual clients with the hope that that will turn around and build wealth and build prosperity so that then we can go pay it forward and help other people. It's almost this, it's like a virtuous cycle when you think about it that way. And it feels less driven by money and driven by having and driven by accumulation. It's more driven by this is the cycle and this is where on the cycle each of these given activities are.
I love paying vendors and subsequent companies that help out our business. I get happy about it. I love it. I'm good with it. And so I'm part of that cycle too. And so I'm just in people's lives. I'm another, in many ways, we find ourselves being the most important financial person in their lives. And so I think they probably want to pay me to do that. I would feel good about that. And so I feel good when we pay folks to do great jobs for us in our business.
Well, have you heard the saying, people who pay attention, but people who get paid pay attention?
Sure do. I sure do. I know we do. We do, but we do more for, I mean, so again, to obligations and to, like, we made a fundamental decision in our business. Like, we could be constructed as a broker dealer, and that's different than being a registered investment advisor. And a lot of people who aren't in our business don't know the difference. So a broker dealer, nothing wrong with these folks, but a broker dealer gets paid from investment companies. They get paid from sponsors and syndicators. That's who pays them, not clients. We've made a fundamental decision to get paid from clients and follow the fiduciary rule and put ourselves in more regulatory crosshair than we would need to. We sign up for that, right? So it is because we just think it's the way it should be. I think all folks that are operating in our capacity should live under a fiduciary rule. Period. End of story. I should do what's in your best interest as a client. Why wouldn't I? And so there's some of that goes beyond our compensation. It would be easier for us to be constructed as a broker dealer. That would be easier. We choose not to, right? So there is some of that where our business goes beyond. It goes to what we think is right and wrong. That's supersedes the amount of compensation we receive.
Well, that's why at the beginning you said there aren't a lot of registered investment advisors who are in the space that you're in, probably for that reason, because you're not selling annuities and you're not selling mutual funds. You're helping people find investments and you have a wider basket to choose from
Yeah,
because you're not getting a commission off of the investment that you're selling. You're getting paid for your time and advice.
100%. And why I think people aren't here is, one, it's an expertise perspective. Like, I spent my basis and background as a professional is based around spending 5-6 years at a pretty large hedge fund. And so I looked and viewed across more investments than I even thought were possible. When I started, I didn't know you could invest in that. I didn't know you could invest in this.
Yeah.
So that's kind of my perspective, is I want that basket. But I think, so there's an expertise issue why you don't see a lot of RAs. But I think more importantly, you don't see a lot of RAs because it opens yourself up to regulatory risk. And they're afraid of some of these investments not going well. And then they're afraid of the ramifications for that. And that, to me, is more of the issue. Why I don't see more of our folks like us in the space is because it's easier to sell annuities. It's easier to play stocks and bonds. It's easier to do mutual funds. It's easier to have those conversations. Regulatorily, it's easier for them to do that. This is harder, but I think it's better. Folks need access to, I want folks of all asset levels and wealth to have access to as many things as possible that they think are interesting or going to make them money. They're intrigued in investing in, period. And so we want to help to do that.
Okay, so many questions about what you just said. Okay, I had a registered investment advisor reach out to me once, and he said, "It's my job to be able to point my clients to the best investments for them. And I know nothing about real estate syndication." He said, "Do you have a class or a group or something so that I can get educated so that I can reliably recommend certain things to my clients?" And I thought, wait a second, why don't they know about this? Real estate is, I don't know why it's I do know why it's considered an alternative investment because it's not liquid. Liquid investments go in our traditional stuff and illiquid stuff is over here. Real estate, collectibles, that kind of thing. But the fact that it's not liquid means that so many people don't invest in it with their traditional advisors or in their traditional custodians. And then they call the self-directed IRA self-directed, which that sounds really scary. How do you find that people are able to kind of get over the hump of saying, there's a whole world of investments out here that I'm not participating in? It's almost like the opposite problem. They don't want to give up control. They don't want to have too much control because they know they don't know what they're doing.
It's sort of two parts. So for our traditional clients on the 1031 DST side, they're more used to quote unquote alternatives, which is, I can spend another hour telling you about how much I don't like that terminology. But nevertheless, we all understand it. We all understand it. We kind of know what it is. And so it sort of makes sense. Everything that's not a stock and bond is now considered alternative, which is weird to me. But nevertheless, it's easier for them because they already live in a world, like their entire business is an alternative, basically. So to them, it's weird not to be able to participate in those kind of investments. So they don't have an issue with it. They just look at it, they're like, oh, that's interesting. Yeah, I want to invest in it. They don't really think much about it. It's more of our W-2 workers that come to us where we're trying to have that conversation, and it's a weird one. Like, oh, this is an alternative. That's risky. Or this,
It's
right?
not
Like they
crypto.
have,
It's real estate, not crypto.
yeah, I mean, it's been embedded in their brain throughout what they've learned about finance. Unfortunately, like I thought I knew something about finance and markets and stocks and things before I showed up at hedge fund I worked at. I didn't know anything, zero, nothing. And then I show up there, I'm like, oh my gosh, now I have a degree in finance and accounting. And I'm like, I don't know anything compared to what's going on here. No one exposed me to this, and so I think there is a lack of education component that we have to get over for our call them more traditional W-2 type workers who earn their income that way. More of our entrepreneurs, though, they don't look at the world like that. They don't really care. They look at the world much more wide open, and it's really easier for them. One of the kind of interesting ways, as an add-on to that, interesting ways we sort of helped other advisors, about a fifth or a fourth of our DST 1031 business actually comes from other investment advisors who don't have the expertise or experience and work in this space, but they recognize the value. And so that becomes a really interesting relationship to have with them in that, hey, they can walk to their client and say, yes, I have these things, but I'm not the expert in them, but I know who is. They're over here. So it's become a great relationship for us to work with about 24 advisors in that way to help them. So if there are advisors listening to this, they're like, I don't know what to do, reach out. We'll help you through it. Like, we got you.
I have so many more questions. So I want to talk about what it looks like from my perspective of an investment fund manager
Yeah.
who's seeking capital introductions from an
Yeah.
RIA like yourself. Walk me through that process because I think it would help our listeners who are active investors and my colleagues who are also managing funds or syndications, but it also helps clients, potentially clients who would come to you and say, "Hey, what's out there? What does this look like? How do I get into this stuff?" So walk me through that process of how I would, I guess, just have capital introductions is probably the best way to put it.
Yeah, variety of ways. So I think the easiest way, and this will all be structure based, right? So when we're looking at syndications or funds, our preference is syndications personally, because I'm able to identify that property and what you're doing there. The fund gets a little bit black boxy for us, and that gets difficult for some of our investors. We're not juxtaposed to it too much. I mean, we'll look, but our preference is more of the syndication where I can see that property and understand it.
Let's take blind funds out of it and specify the customizable funds where each asset is insulated from other assets and they're making decisions on each asset individually, just like a syndication. So let's do syndications and customizable funds because I feel like blind funds are for a particular kind of person who's just take my money, I trust you. that's not our kind of client. It's the kind of person that we
Me
want to
neither.
work with wants to actually choose their investment. So we have a customizable fund because we don't want any of that blind trust stuff going on.
Yeah, and me neither. I don't want that either. I want educated investors who are reading these documents. So in that way, it's really easy. Like for our perspective from a process, reach out to me. We'll literally review everything. It's myself and a team of 3 other folks that all they do all day is due diligence. It's like a mini due diligence sweatshop. They just bang all this stuff out every single day. So it's really easy for us to do that. We want to look at deals. We desperately want to look at the sponsor syndicator. You got to do both. They're equally important. So we'll put people through the ringer on that. It's not as probing as it may sound or seem. So I don't want people to be afraid of that per se, but we're going to dig in and we really want to understand you. We're going to be probably your most, from a due diligence perspective, we're going to be your most intense investor partner that you're going to have. So for some people, that's kind of scary. But ultimately, I think it's for folks that get it, it's good. Like we're trying to make
Yeah,
everybody
bring it.
better, right? Yeah,
Yeah.
bring it. That's the attitude that I want. And so for folks that are interested in that, I mean, that's the easiest way. The harder way, but we think is kind of interesting, is we started this conversation with some syndicators about, hey, would you consider entering the DST space? And this is for syndicators that have taken a property, they've added the value, they've
Mhm.
stabilized it, it's of adequate size, and they're looking for an exit. DST might
Okay.
be the answer to that. So, in essence, you would look to syndicate it a second time into a DST investment. Those DST investors will take out your LP, right? And this becomes another set of investors. You get to, in essence, keep control of the property as a syndicator. And you've entered a space that is a $9 billion sized industry that probably should be 2 times, 3 times that at least. So
Yeah.
we think that's an interesting thing. If syndicators are looking for an exit out of stabilized properties, I think it's worth to have a thought conversation about what would it look like if you entered the DST space? And we will engage as a consultant with those sponsors to quarterback the entire process, legal, third party work, capital fundraising and formation from the right parties that have 1031 capital. We'll do that entire side of the equation for them. So that's been sort of a newer thing for us. We've taken a handful through that process and have another handful that we'll put through next year. And to us, it's very exciting because now we get a little bit more of a hand on the wheel about who's coming to the space. And it kind of gives us a little bit better access to, and I think better properties as well and great sponsors. So if there are folks that want to have a more strategic conversation like that, I think that could be really interesting.
Yeah, it sounds like it works really well for heavy value adds, either new construction or things that have a component of risk upfront. But then on the end, when it's stabilized and it's leased up and it's occupied, it is a less risky thing that is could spin off less returns for the value investor, not the value investor, the coupon clipper investor who's just looking
Yeah.
for reliable cash flow.
And I imagine your LPs looking at that going, well, when are you guys going to sell it? Like, that's
Yeah.
not like we've done the work. It's over.
Yep.
You know what? Move
Yep.
on to the next
Stabilized.
thing.
Are we done yet? But there are some
Whereas you're
properties
looking
I
at
don't
like,
want to get rid of.
exactly, because you know them really well. And you're like,
Mhm.
this is gonna be a great property. And I already know
Yep.
it. Well, how do I hang on to it? It's like, well, in essence, we recapitalize the stack. So we take some folks
Okay.
out, bring folks in with different objectives. So it could
Interesting.
be really interesting.
We need to have a discussion offline about it because I feel like there's so much out there that as a kind of younger fund manager, I'm just not aware of. Just having more of those conversations and getting access to more people who are looking for high quality alternative investments. So before we wrap up, I think we did kind of our inspirational, looking forward, future type of discussion kind of in the middle. So I want to come back to that investor that you were talking about, that educated investor. Before someone walks into your office or has that first consult call with you on Zoom, what are the things that you want them to know before you ever talk? Obviously, you can take somebody from zero to wherever, but
Yeah.
what baseline do you think that they should have before they go down that path?
It's not as much of a baseline. I want them instead to be open to and ready to have a conversation that might be a little bit uncomfortable and a little bit transformative in their lives. I want them to be ready for that. So, technically, the things I can do and understand is, have you reached a decision point where you want to sell valued asset A, B, and C? Why have you gotten there? We can have that conversation, sort of walk that path of why you want to do that. But if you already made that decision, great. And we definitely want to see you before you've made a decision, before you've sold. So just operationally, technically, please don't sell and then come talk to us. Like we need to have that conversation before, desperately, because we're gonna have a lot of problems if you're already sold. You can work around
Okay.
some things, but you can really limit your options. So, a timing
Mhm.
perspective, I want you there, but I really want you to be in a different mindset. I don't need you to know anything about what we do, frankly. I want you to be in a mindset of, yes, I want to sell this asset. I don't want to do this work anymore. I have this problem. Can you help solve it? Yes, we'll walk you through that. But yeah, the
Okay.
baseline understanding, other than that, don't really need it. Just need you to be ready to have an interesting conversation. That's all.
Yeah, and I think that after this conversation we had today, you are definitely up for it. Go the places that others fear to tread because these are people's lives, their posterity and their inheritances, and this is big stuff. So I appreciate you coming and educating us about it, and moreover, telling us about the kind of people that we can be, the kind of people that we already are, and what we're shooting for, but then also recognizing how we are right now and how we can just move forward in that space and just keep on just being true to ourselves.
We're trying. And I appreciate being on. Thank you so much. It's been an
Thank you
interesting
so much.
conversation. We can do another couple hours, no problem.
Yeah, let's revisit this.
Yeah.
And let's have a conversation offline, get me more educated on some of the options that I have as a syndicator, fund manager. And then let's revisit this and keep educating because there's so much in this space, so many options that people have that even though I work in it full time, don't really feel like I quite understand as many as I need to. So I appreciate you coming on today, educating us. Where can people find you after the show? We want people to reach out. The show is about networking. We don't just do this so we can listen to each other talk. We want to talk to you after the show.
Yeah, me easiest place to find me all over LinkedIn. So easy to find me out there. You have the website up, investwithinsight.com if you want to learn more about us. We have a podcast too, The Retiring Real Estate Investor. We've done 30 odd episodes of that. Just launched that in 2023. So please listen to that for more information. I'm easy to find.
Awesome. I want to be on that podcast. It's just like the name.
Go
I
ahead.
was like, why did I name my podcast that? Because we're retired real estate investors, and that's the message that we're spreading, how to retire on real estate. So appreciate it. Thank you so much, Brandon.
Well, thank you.
Okay, I got off of that one and just coughed and coughed and coughed and coughed. It was so interesting to hear Brandon talk about what could be considered a dry financial tax code kind of topic from a life and human perspective. Those conversations that we need to have about our assets, our money, our heirs, all of the things that really make up real life for us, and how our assets and our estate and our wealth are an integral part of who we are and the life that we're trying to build, not only for us, but also for our heirs. Legacy wealth is really something I've never been concerned with because I bought enough properties from families who have these properties that they don't want and don't know how to run, or because I have a large family and I understand that it's not my responsibility to continue to provide for them after I die. Yet at the same time, if that's the kind of wealth building that we're able to do, that now I'm forced to think about it because I want to be a good steward and I want to help my children be able to inherit gracefully. These conversations have become much more interesting to me because even though legacy wealth wasn't a goal of mine, it's certainly going to be an outcome of our activities. And talking to Brandon and getting those kinds of plans set up helped me be able to recognize that responsibility and do a good job. Please be sure to reach out to both of us after the show. You can get a hold of me at partnerwithrise.com, where we have our current investments available. Again, it's a customizable fund where you get to choose what you invest in and what you don't want to invest in. And then taking advantage of the resources that we put it before you on this podcast on how to do your own due diligence and also the people that you can hire to help you do due diligence to make sure the investments are sound, free from fraud, and they're set up for success to deliver the kinds of returns that you have grown to expect from your investments. I'm looking forward to hearing from you after the show so that you can tell me all about your next passive income adventure.